had a transformative year. I mean, for us, we had almost $2 billion in sales. Sales growth was 25%, 19% same-store sales growth. We had a $400 million improvement in free cash flow, and our profit for last year was equal to the 3 previous years combined. So we just had a record year.
So let's talk about the future and what you see there. Now, obviously, consumer habits during this past year did change. People were not going out and buying nice suits, Armani's and so forth to go to work. They were spending money on their homes, and that shows up in the numbers of your company, the companies like Home Depot and other home decor and furnishing companies. But what about the future? There seems to be some concern that people will go back to old habits.
Well, I think that the value of work and the changing work environment is going to be here to stay. I would say that we're all going to be in a hybrid mode. In fact, our office is going to go to a hybrid mode as well. So some work from home, some in the office. And so people will still invest in their home and in home office going forward. Clearly, obviously, a shift will be from goods to services a little bit, but we grew 4 times the industry average. So in an industry that's still $200 billion, that's up for grabs, and we're only $2 billion, not even. There's a lot of opportunity for us to continue to gain share like we did last year.
But do you think that the absolute dollar amount spent, Lee, on your site on home furnishings could actually remain the same or be higher this coming year when people might be spending on other things? I mean, there's just competition for people spending in an increasing way in a reopened economy.
I think there's obviously going to be a shift in the marketplace. There has been for some time. In fact, 1,500 stores in our sector closed last year. So there's winners and losers. People gravitate towards the winners. We're clearly a winner. When you grow at the rate that we have, 4 times the industry average, and have the profitability that we have, and we continue to open more stores, and we added e-com this past year, we give people more solutions to come to our store, and we've got the lowest prices in the industry, and people do gravitate towards great value at times like this. And we have the largest assortment, so we make it easier for a one-stop shop.
We mentioned at the top supply chain issues, and I'd add to that potentially, I'd like to get your thoughts on tariff issues. I assume that at least some of your products are sourced out of China. Talk to us about any supply chain issues that you're seeing either out of China or other manufacturing centers around the world, and then specifically address the tariff issue if it applies in your business at all.
Sure. There's global supply constraints right now across the globe. And so we're dealing with it, navigating it quite well. We're now at the size, we're the 35th largest importer of goods in the U.S. of all industries. So we have scale and the ability to work with our supply chain. Our inventory position has improved through this time since May, when we were down 30% on a company-wide basis. We went down 20% in Q3, down 13% in Q4. Our receipts continue to outpace our sales on a weekly basis the past 6 months. So we've been able to navigate it, but it is costing us more. And we've been able to have great partnership to make that happen for us, but it is costing us more to make happen. So on the second question around tariffs, we do import a lot from China. They've been great partners for us. We have reduced our dependence on China imports over the past number of years as we've gone direct sourcing. And we don't see, from a tariff standpoint, that changing much. In terms of the new administration hasn't mentioned anything about that lately. So we've already built that into our consensus forecast.
Shepard Smith here. Thanks for watching CNBC on YouTube.